Big moves are happening in the AI world. OpenAI is reportedly building its own custom AI chips, cutting ties with Nvidia for some of its operations. And in a related twist, Microsoft CEO, Satya Nadella just sold $75 million worth of shares. Are these warning signs, opportunities, or just normal market activity? Let's break it down. Imagine OpenAI, the company behind ChatGPT, designing its own chips. The implications are huge, not just for AI technology, but for the companies supplying these chips and the investors holding their stock. And meanwhile, insider stock sales from top executives always make headlines for a reason. Stick around, because by the end of this video, you'll know what these moves mean for your portfolio. According to the Financial Times, OpenAI is working with Broadcom to build its own AI chips, expected to roll out next year. These chips aren't for sale, they're just for OpenAI's internal operations. The goal? Massive. OpenAI wants to reduce reliance on Nvidia, lower operating costs, and scale its AI models more efficiently. It's a move that mirrors what tech giants like Alphabet, Meta, and Amazon have been doing for years, building custom chips to handle the enormous computing power needed for large language models. In simple terms, OpenAI wants its own engine to run AI faster, cheaper, and more reliably. Broadcom CEO Hock Tan recently hinted that the company secured a massive new AI infrastructure client, believed to be OpenAI. Broadcom expects over $10 billion in orders from this new partnership, potentially making OpenAI its fourth major AI customer. This is a huge win for Broadcom, which has already been riding the AI wave with 3 major clients contributing to strong growth in 2025. Investors are watching closely because Broadcom's AI revenue is expected to grow significantly in FY26. Why should you care? Custom chips are a strategic play. AI workloads are growing exponentially, and companies that control the underlying hardware can optimize performance and costs while reducing dependence on suppliers like Nvidia. For investors, this could shift the AI landscape. Companies like Nvidia could face less demand from one of their biggest AI clients, while Broadcom could see a massive boost. And OpenAI strengthens its position in the AI race, essentially becoming more self-reliant and scalable. Meanwhile, Microsoft CEO Satya Nadella sold $75 million of MSFT stock on September 3rd, according to SEC filings. Insider stock sales can happen for many reasons, but investors always pay attention because they might signal confidence or caution about a company's future. Nadella sold roughly 149,205 shares at prices between $503 and $507. Yet, he still owns over $400 million worth of Microsoft stock. Analysts remain bullish, giving MSFT a strong buy rating with a potential 23% upside. Here's the connection. Microsoft is heavily invested in AI, partnering with OpenAI and integrating its models into products like Azure and Office. Insider sales don't necessarily mean trouble, but they do remind investors to watch the market closely. Meanwhile, OpenAI's chip strategy could impact Microsoft indirectly, by changing how AI workloads are handled and possibly influencing cloud computing dynamics. It's a complex chess game, but understanding these moves can give investors an edge. So, what's the bottom line? OpenAI building custom chips signals long-term strategy and independence. Broadcom stands to gain massively, and Microsoft's insider stock sale is something to monitor, but not panic over. Investors should keep an eye on AI infrastructure developments, chip partnerships, and insider movements. They all tell a story about the future of AI and the stock market. What do you think? Will OpenAI's chips change the AI game? And do you see Microsoft's insider sales as a warning sign or just routine trading? Comment below and let's discuss.